What's going on, everyone? Welcome back to the Independent Experience. I'm IndyXP, and this is your morning market wake-up call for Friday, July 3rd, 2020. The markets are closed today. It's Independence Day weekend. So, overseas markets are propping us up right now. Let's go ahead and take a look at the markets and see where we're going to be at today. Gold is up slightly, currently at $17.79.17. Silver is up as well at $18.12, giving us a ratio of 98.21. Platinum is up slightly, currently at $819.72, and palladium is up slightly as well at $1975.45. In other metals markets, rhodium is up $100, currently at $7,900. Copper is down a few cents at $2.71. Aluminum is steady at 72 cents, and uranium is down 20 cents at $32.60 a pound. Barrels of crude oil were up overnight, flirting with $41, but it is back down, currently at $40.02 a barrel. We had a positive gain on Wall Street yesterday, and it did close out the week up. The Dow was up 92 points yesterday, closing out the week at 25,827.36. The Nasdaq was up 53 points, closing out the week at 10,207.63, and the S&P 500 was up 14, closing out at 31,30.01. If you guys trade in Bitcoin, those are down slightly, currently at 90,87.52, and if you happen to be a fan of the gold back like yours truly, those are up 2 cents at $3.06. In today's video, we are going to be reviewing an article that comes to us by way of Kitco. Anna Golubova from Kitco wrote an article posted yesterday afternoon. Gold setting up for major summer rally. Watch this level next week, analysts state. After touching and then falling back below $1,800 an ounce, gold might be gearing up for another significant rally this summer, and this is the critical level to watch next week, according to analysts. Q2 wrapped up this week, and gold saw its best quarterly performance in more than 4 years. The quarter ended on a turbulent note as the August COMEX gold first reached its 8.5 year high on rising coronavirus cases in the U.S. and then fell back below 1,800 on risk-on sentiment led by the vaccine-related headlines as well as positive U.S. data. Investors are encouraged by a promising early trial of an experimental vaccine from Pfizer and BioNTech SE. I don't know what that company is. Never heard of that one before. I'm in Indianapolis. I'm an Eli Lilly guy. Which showed patients producing antibodies against the virus. The U.S. jobs report also beat expectations on Friday, with the U.S. economy adding another 4.8 million jobs, and unemployment rate had dropped to 11.1%. However, going forward, the data could begin to deteriorate, warned the CIBC Capital Market Senior Economist, there we go, got it, Andrew Gratham. Quote, it will be much slower, harder going from here, with COVID-19 counts rising again in parts of the country, leading to the delay reversing of reopening plans. High frequency employment data already shows a stall in the prior improving trend towards the end of June. And with several industries unable to fully open until a vaccine/treatment is ready, progress will remain sluggish even if case counts start to ease again, Gratham said on Friday. This article was posted yesterday. Was this last week? Might have been last week. Who knows? Maybe they misdid the date. I couldn't tell you. Let's continue. Gold on track to 1,800 and higher. Gold prices are on track to sustainable climb above the $1,800 level, says Afshin Nabarvi. Man, these foreign names. It's too early for this man. Senior Vice President at Precious Metal Trades, MKSASA, highlighting a level traders should be closely watching. Every day we have bad news, whether it is COVID related or not. Gold is looking at a possibility of approaching $1,800, especially if it can break above $1,790. Gold tested $1,800 in the August COMEX futures this week, but was not able to hold that level because of lack of breaking above the 1790 in spot prices, which brought in profit taking and eventually stop losses, said Nabavi. N-A-B-A-V-I, Nabavi. There we go. You gotta say it like you're from Jersey. It's Nabavi. Gold is back in its trading range with 1755 acting as a good support on the downside and 1785 as good resistance, he added. A lot of the firms have financial year end in June, and yesterday was a brand new Happy New Year. A lot of people are bullish on precious metals. Everyone is looking for a safe haven, Nabavi said. All about inflation. Inflation is the trigger to watch for gold as precious metals trading regime is shifting from safe haven play to an inflation hedge one, said McKay. We are starting to consolidate a bit in a higher range here. Likely make another attempt to break $1,800 level, he said. When we start to get more inflation response, the Fed policy will remain very supportive and rates low for the foreseeable future. The Federal Reserve will be willing to let inflation run higher while keeping rates low, which will lead to gold breaking $1,800 an ounce. That is coming. I wouldn't expect any major sell-off, and any major price drops will be bought, he noted. Inflation is already looking at some stabilization, said RBC Wealth Management Managing Director George Jarrow, who is expecting gold to climb above $1,800 an ounce. Seeing a trend here. Everybody thinks it's going to go above $1,800. Looking forward, steadying food prices, gasoline prices, political headlines, pandemic headlines, economic headlines, virus serum headlines are all inflationary, so gold will rise over $1,800, Jarrow said on Friday. The biggest risk for gold. News of a second COVID-19 wave remain top of mind for investors as the U.S. daily infections topped 50,000 on Wednesday for the first time, said McKay. Any escalation in infections and potential secondary shutdowns would be negative for gold, he clarified. This is the largest risk for gold. Potential shutdowns would have a deflationary response. Gold doesn't do well in that environment, McKay said. Well, gee, I think we saw that in March. What to watch? Next week will be a quiet one from a data perspective. The week will kick off with one of the most important releases to watch, the US ISM non-manufacturing PMI for June. Potential upside in the data could surprise the gold market with another knee-jerk reaction, which will ultimately be a buying opportunity, McKay said. On Friday, investors will be eyeing the U.S. PPI number for June. Again, that was an article from Kitco. A lot of technical data. That was showing it was from Thursday, July 2nd. So that must have been last Friday they were talking about on there. So as far as the article goes, they're talking about, gold. Sounds like gold is definitely going over 1,800. I would imagine the ratio, the gold to silver ratio is now, it's kind of settled into that new norm for us at 97, 98, 99, maybe 100. I think that's going to be the new norm for a while. But I would expect if gold's going to rise, then silver is also going to rise. I don't know if we're going to get to the $20 an ounce that we've seen before, but it'd be interesting to see how it goes. What do you guys think? I'd be very interested to hear what you guys have to say on the topic. Go ahead and leave some comments down below. Guys, I do greatly appreciate every single one of you, and I hope everybody has a fantastic 4th of July weekend. Let's celebrate America by blowing up a small piece of it. If you enjoyed today's video, go ahead and hit that thumbs up button from right there. I greatly appreciate it, and it helps me out immensely. If you happen to be new to the independent experience, why don't you consider hitting that subscribe and jingle bell right there in the corner, bing bong, so you can keep up to date on when all the new content comes out. We'll try to put these out for you 5 days a week. If you want to catch up on some of the past videos, we're going to put that card right here. Got it almost down. Almost got it figured out, guys. Right there. That's where that card's going. Make sure you click on that at the end of this video, and you can go back through the back catalog. I've been IndieXP from the Independent Experience, and I'm here again to remind you, if the women don't find you handsome, they should at least find your pockets heavy.